Welcome to the Deep Dive.
Great to be here.
Today, September 9th, Oracle dropped their Q1 Fiscal 2026 results, and we're jumping right in.
Yeah, lots to unpack.
Absolutely. Our mission today, get straight to the core earnings, especially that booming cloud and AI revenue, and, well, the forward guidance that's really got everyone talking.
It certainly has.
This is basically your shortcut to understanding where Oracle's heading right now.
Yep.
So let's unpack this. Oracle's Q1 total revenue, $14.9 billion.
Right.
That's up 12% year over year, 11% in constant currency. Pretty solid top-line growth.
It is solid, yeah. But, the market reaction, that stock jump, suggests people were looking past just that number.
Definitely. So what really stood out in these earnings? What were the key bits?
Well, you're right. The earnings per share tells a more nuanced story. GAAP EPS was $1.01, actually down 2%.
Down slightly, okay.
But then you look at non-GAAP EPS, which, often gives a better view of operations. That hit $1.47, up a healthy 6%.
Ah, okay. So what accounts for that difference?
Yeah. It's mostly adjustments, but one big factor this quarter was a $958 million net tax expense. It's from that new tax legislation, the One Big Beautiful Bill Act, signed back on July 4th.
Right. I remember that.
And that specific tax hit was excluded from the non-GAAP number. So it gives you a maybe cleaner look at the underlying business performance.
Got it. But digging deeper, there's this one figure that just jumps off the page. It feels like the number defining their momentum.
You mean the RPO?
Exactly. The remaining performance obligations.
Yeah.
It hit $455 billion.
Yeah. Staggering.
Staggering is the word.
Yeah.
An incredible 359% increase, both USD and constant currency. Just wow. And just to remind everyone, RPO is that booked business, right? Committed, but not yet revenue on the books. Future business they've already signed.
Precisely. And it's not just a big number. I mean, this fundamentally changes their risk profile.
How so?
Well, think about it. A huge chunk of future revenue shifts from being potential to already committed.
Right. Locked in.
Exactly. It provides this powerful long-term revenue visibility that very few companies actually have. It basically guarantees a significant revenue stream for years.
And that kind of predictability.
In this market, it's invaluable, which explains that CNBC headline perfectly, doesn't it? Oracle's stock pops 21% on growth projections, even as earnings miss estimates.
Yeah, it nails it. The market's clearly laser-focused on that future potential represented by the RPO.
Absolutely.
So a $455 billion RPO.
Yeah.
We're talking a massive committed backlog signaling huge future revenue recognition. A very powerful statement.
Yeah, so.
Okay, let's zoom in on the engine driving a lot of this excitement. The cloud business.
Right.
Total cloud revenue hit $7.2 billion in Q1. That's up 28%, 27% in constant currency. That feels like a real acceleration.
It absolutely is. And when you break down that cloud number, you see some clear drivers. Cloud infrastructure, IS, is the real star here.
Okay.
$3.3 billion in revenue, growing at a remarkable 55%. That's 54% in constant currency.
55% for IS. That's huge growth.
It really is. And that acceleration points to this deep foundational shift. Businesses aren't just using Oracle for apps anymore. They're relying on it for core infrastructure, the backbone of their digital stuff.
So wider adoption across industries for that fundamental layer.
Exactly. The sheer velocity of IaaS growth proves Oracle's becoming a critical infrastructure provider.
What about the application side? SaaS.
So cloud applications, SaaS, brought in $3.8 billion. That grew 11% or 10% in constant currency.
Still strong growth, just not the explosive IS numbers.
Right. And within SaaS, you've got key players doing well. Fusion Cloud ERP and NetSuite Cloud ERP both hit $1 billion in revenue each.
$1 billion each. Nice milestone.
Yeah, growing 17% and 16% respectively. So, while ISS is accelerating like crazy, the mature SaaS side is still delivering consistent, really valuable growth.
Okay, so strong cloud performance overall, but SaaS is really hitting escape velocity.
That's a good way to put it.
Now, as if that wasn't enough, the story gets maybe even wilder when we look at multi-cloud and AI.
Oh, yeah. This is where things get really interesting.
It feels like it's reshaping not just Oracle, but the whole enterprise tech landscape. More than just small improvements, right? A fundamental shift.
I think so. I mean, get this figure. Multi-cloud database revenue, this is from the big hyperscalers. Amazon, Google, Microsoft.
The giant.
Yeah. That revenue grew, wait for it, 1,529% in Q1.
1,529%. Seriously.
Seriously. That's not a typo.
Yeah.
This strategy of putting Oracle databases on other clouds, It's clearly working. It gives customers huge flexibility. Run Oracle DB where your apps already are.
And Larry Ellison, Oracle's chairman and CTO, he's clearly all in on this.
Oh, absolutely. He explicitly said he expects multi-cloud revenue to grow substantially every quarter for several years.
He's not messing around.
Nope. And he backed it up. They plan to deliver another 37 data centers to those hyperscaler partners for a total of 71.
71 data centers hosted with competitors, essentially. That's a significant build-out.
It is, and it connects directly to AI. Ellison also announced the upcoming Oracle AI database service.
Okay, what's that?
It's set to launch next month at Oracle AI World. And the revolutionary part is it lets customers use large language models, LLMs like Google's Gemini, OpenAI's ChatGPT, xAI's Grok.
The big names.
Right. Use them directly on top of their existing Oracle databases.
Directly on existing databases. That raises a huge question for anyone listening who uses Oracle. How does that unlock value?
Well, think about it. Tens of thousands of Oracle customers suddenly get access. They can analyze their own proprietary data using these advanced AI models instantly.
Without moving the data, without complex integration.
Exactly. Imagine the speed that brings to AI adoption, the efficiency.
That could be a game changer for many businesses.
And we're already seeing customers using OCI for AI in really compelling ways. Take Cohere.
The generative AI company.
Yeah. They expanded OCI usage, specifically citing unparalleled performance and scalability. Or Matic robots. They chose OCI for high-performance AI infrastructure to speed up training for their autonomous robots.
Okay, real-world examples.
Definitely. Magum.ai, they do AI-powered sign language interpretation. They used OCI GPUs to cut streaming costs and actually doubled their stream per GPU capacity.
Doubled capacity. Impressive.
And ModMed in healthcare, using OCI to enhance and serve their specialty-specific AI models. So you see it across different sectors, tangible benefits right now.
Right, these aren't just future promises, they're happening now.
Correct.
So with these foundational shifts, that massive RPO, where does Oracle see things going next? What's the crystal ball say?
Well, CEO Safra Catz is already looking ahead. She predicted that RPO figure, the $455 billion, is likely to exceed $500 billion within the next few months.
$500 billion, just wow. That amount of committed business is almost hard to fathom.
It really is.
And then there are those specific OCI revenue projections they put out. They seem incredibly ambitious.
They are striking, yeah. They expect OCI to grow 77% just this fiscal year, FY26, hitting $18 billion.
Okay, 77% this year. And then
The projections for the next 4 years are, well, audacious, $32 billion, then $73 billion, $114 billion, and finally, $144 billion.
$144 billion in OCI revenue. That's massive scale. Now, obviously, the cloud space is super competitive, huge investments needed. What are the hurdles Oracle faces hitting those numbers, and how do they plan to clear them?
That's the critical question, isn't it? Competition's fierce. CapEx for data centers is enormous. But what gives these projections real weight is something Safra Catz pointed out.
What's that?
She said, most of the revenue in this 5-year forecast is already booked in our reported RPO.
So it's not just wishful thinking. A large part is already committed business.
Exactly. It's substantially de-risked compared to purely aspirational forecasts. Plus, their strategy of building data centers within the hyperscalers' environments helps them scale fast.
Right. Leveraging partners' reach instead of building everything independently everywhere.
Correct. It gives them speed and reach. So that committed pipeline is a pretty strong buffer against market swings.
Okay, that makes sense. So with all this innovation, this huge growth focus, how are they balancing shareholder returns with funding it all? Let's quickly touch on the financial health basics.
Good point. Amidst all the future talk, they didn't forget shareholders. The board declared a quarterly cash dividend, $0.50 per share, steady return there.
Okay.
And crucially, this growth isn't just on paper. It's backed by solid fundamentals. Their operating cash flow over the last 12 months was $21.5 billion.
$21.5 billion cash flow.
Yeah, up 13%. That strong cash generation is vital. It means they can fund a lot of this aggressive cloud and AI investment internally.
Without relying too heavily on debt or external cash.
Exactly. It points to a healthy, kind of self-sustaining growth model.
Okay, so a quick summary of Oracle's Q1 FY26. We've got stellar cloud growth, especially IS, AI playing a huge role fueling that unprecedented RPO number.
$455 billion and climbing.
And really robust long-term projections backed by those commitments. Really a brilliant start to their fiscal year.
Absolutely. And if you connect it to the bigger picture, Oracle's strategy, especially multi-cloud and the upcoming AI database, it positions them not just as another player, but as a key enabler of AI transformation.
How so?
They're making it significantly easier for potentially thousands of companies to use advanced AI on their existing, often mission-critical data. That's a big deal.
It really is. And that leads us to a final thought for you, our listener.
Yep.
Considering Oracle's unique approach, bringing AI directly to where all that enterprise data already lives, how might this affect the speed and, importantly, the accessibility of AI for businesses worldwide, especially maybe those in regulated industries who are hesitant to move data?
Yeah, that's a great question.
And what does that imply for the whole competitive landscape of cloud and AI over the next few years? Something to think about.